Hello and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is November 17th, 2025, and we are taking a close look at one of the most talked about stocks on the market, Tesla, ticker symbol Tesla. There has been a flurry of news recently that has caused some major waves in the stock price, and we're going to break it all down. Several reports from about 4 or 5 days ago highlighted a dramatic drop in Tesla's China sales for the month of October. Outlets like Yahoo Finance and MSN reported on this, noting that the negative momentum led to a significant slide in the share price. This news seems to be the primary catalyst for the bearish pressure we saw late last week. Now let's switch over to the charts and see if the price action reflects what the headlines are telling us. Here on the daily chart, we can see the broader picture over the last several months. The stock has been incredibly volatile, with major swings in both directions. We saw a significant run-up starting in late October, where the price climbed from around $420 to a recent high of nearly $474 in early November. However, that bullish momentum came to a screeching halt last week. If we zoom in on the last couple of weeks, the story becomes much clearer. This is where we can directly correlate the news about China sales with the price action. Look at this massive red candle on November 13th. The stock gapped down and fell sharply, dropping over 5% to close just above the $400 psychological level. This move came with a huge spike in volume, indicating strong selling pressure, which aligns perfectly with the timing of the negative sales reports. The following day, November 14th, the selling continued at the open, with the price plummeting to a low of $382.78. However, buyers stepped in aggressively at that level, pushing the price all the way back up to close positive for the day at $404.35. This long lower wick on the November 14th candle suggests a potential exhaustion of sellers and a strong area of buying interest, establishing $382 as a critical short-term support level. The price is now caught between this new support and resistance from the breakdown area around $425 to $430. Let's drill down to the 1-hour chart to get a more granular view of this recent action. Here, we can see the waterfall decline on the 13th in stark detail, with consecutive bearish candles on high volume. The morning of the 14th shows that capitulation, followed by an incredibly strong, V-shaped recovery throughout the rest of the trading session. The price managed to reclaim the $400 level by the end of the day, which is a positive sign for the bulls. Since that bounce, the price has been consolidating in a tighter range. For traders, this hourly chart shows a battleground forming between the bears trying to push it back below $400 and the bulls defending the recent low. Now, for the intraday traders, let's look at the 15-minute chart from November 14th. You can see the stock gapped down at the open and made its low for the day within the first couple of hours. The reversal started around the $382.78 mark, and once it began, it was a steady climb upwards for the rest of the day. The price crossed above the VWP midday, which likely triggered more buying from algorithmic and technical traders. It then consolidated near the highs into the close. This chart illustrates just how quickly sentiment can shift in a volatile stock like Tesla. A key takeaway here is that the initial panic selling was met with even stronger buying pressure, creating a potential swing low. So, let's zoom back out to the daily chart and recap what we're looking at for the short and long term. Your key support level to watch is the recent low of $382.78. A break below this level on high volume would be very bearish and could open the door to a further decline, potentially towards the $350 to $360 range, which acted as support in late August and early September. To the upside, immediate resistance lies around the $425 area, which was a previous support zone. If the bulls can push the price above $425, the next major resistance would be the recent highs around $474. Now for some unbiased scenarios. A bullish scenario, which I'd give a 50% chance, is that the low at $382 holds and the stock begins to build a base above $400. For this to gain traction, We'd need to see it break and hold above that $425 resistance level. Positive market sentiment or some good company-specific news would reinforce this outlook. Conversely, a bearish scenario, which I also see as a 50% possibility, involves a failure to hold the $400 level and a subsequent break of the $382 support. This would suggest that the bad news from China has longer-lasting effects than just a one-day panic sell-off. This would be reinforced by a broader market downturn or further negative headlines for Tesla. Things to watch for will be any follow-up news on global sales figures, especially from China, and any statements from the company or Elon Musk that could act as a market catalyst. And of course, keep an eye on overall market trends, as they will heavily influence TSLA's direction. To summarize the key levels, support at $400 and $382, and resistance at $425 and $474. Please remember, this analysis is for educational purposes only and is not financial advice. You should always do your own research and make investment decisions based on your own risk tolerance and financial situation. Thanks for watching Explain the Charts. Don't forget to like and subscribe for more in-depth chart analysis.